Welcome to this edition of Diligence Inside America's Boardrooms. I'm TK Kerstetter, and I'll be your host for today's show. Today, we're going to be talking about audit committees and the challenge of year-end financial reporting and disclosures. And joining me to have this discussion is Stephen Parker, who's a partner with PwC's Governance Insights Center. Welcome, Stephen.
Thanks, TK. It's great to be with you today.
So I'm pretty sure we did this last year, and this is sort of an annual event, which is an annual event for all boards and audit committees, which is sort of year-end financial reporting. So I had the benefit of seeing where PwC has once again published its guide approaching the 2022 year-end financial reporting season and gives tips and clues to help audit committees during that. I know audit committees continue to be challenged and with the changing macroeconomic factors. And I'm going to ask you if you might be good enough to summarize what audit committees should be focused on as they prepare for the year-end cycle.
Sure, TK. And you are right to assert that audit committees have much on their plate, continue to have much. As we summarize in our year-end guide, audit committees have reason to be concerned from the uncertainty driven by geopolitical unrest and changing macroeconomic factors. So understanding how such conditions may impact accounting and disclosure is an imperative at this time of year. We also see continued trends to more transparency when it comes to disclosure in a company's quarterly and annual financial reporting, as well as in its annual proxy. In the area of changing regulation, there may be certain elements of the Inflation Reduction Act that have an immediate or even near-term impact on companies. Their new items are being considered by the FASB, and of course, we can't forget about the SEC and its agenda, including the climate and cybersecurity rulings expected to be finalized in early 2023, and the expected proposal on human capital. Another trend we're seeing is that audit committees' evolving role in the area of ESG oversight, how that role is being developed and how it's even getting disclosed to stakeholders. And finally, there's certainly a couple of things we include as suggestions for audit committees to keep on their radar, including the company's activities with renewable energy credits and carbon offsets, its strategy and related investments in crypto assets, and its thinking around investment in the metaverse.
So sitting here, that's a lot to digest. Maybe we can dive just a little deeper into some things that are particularly important. You mentioned macroeconomic factors. Stephen, can you explain a little more why you're referring to those and why it might be so important to audit committees here at year end?
Yeah, TK, I think you hit on maybe the most important item, certainly the greatest priority, because the current macroeconomic environment is impacting businesses broadly across the globe. Specifically, I'm referring to factors such as increased inflation, rising interest rates, labor pressures, the war in Ukraine, supply chain issues, and just a general concern for the economy and the potential for recession. While the ultimate effects on any given company will certainly differ depending on a company's industry or its global footprint and its strategic initiatives. Is it in a restructuring mode? Is it divesting of businesses, or is it being acquisitive? But the severity and duration of any one of these factors or combination could have a significant impact on a company's financial reporting and disclosure. We include in our guide examples of these potential impacts, and they include first the recognition of impairments. Rising interest rates and inflation can impact asset values. They increase the cost of capital for a company and put downward pressure on valuations of tangible and intangible assets, including goodwill, potentially leading to impairments. Secondly, companies may also experience reduced cash flow. Global supply chain disruptions, the availability of critical talent, and customers who may be affected by conflict and inflation could result in lower production capabilities for companies, diminished customer demand, and reduced operating cash flows. The impacts of these matters could further exacerbate that risk of asset impairments, also putting pressure on achieving financial covenants and borrowing agreements, and result in liquidity challenges. And finally, even going concern evaluations. TK, in more severe cases, recession and growth concerns may initiate or increase the risk that a company cannot continue as a going concern. In addition to reduced operational cash flows, the risk that companies will fail to meet contractual and non-contractual obligations may increase uncertainty and the possibility of the business failing. Now, all of this is relevant to the audit committee in fulfilling certain of its core oversight responsibilities. Importantly, the audit committee is going to want to understand management's perspectives on the potential impacts to the company of these macroeconomic factors. Whether internal controls of the company are designed to withstand some of these extreme circumstances, how management is prepared to respond timely to these challenging and changing conditions, and what, if any, accounting and incremental disclosures might be necessary in the company's periodic filings.
Well, I think that is all daunting to anybody that serves on the audit committee. But the good news is that I think audit committees have done a great job, okay, in their year end, and in fact, in all their obligations, as you know, that are written up in their charter. And when I think of audit committees and start to look ahead a little bit, Stephen, you know, the first thing I think about in their charter is the financial reporting, you know, and oversight responsibility. But again, looking into 2023, I can't help but think about the recent SEC actions related to disclosures that's going to impact the audit committee as well, like ESG, climate, you know, different proxy disclosures, et cetera. I'm sure that's on your radar as well.
It is, TK, and we delve into this in our guide here at year end. And you're right again. The disclosures are becoming more important and more critical. You know, providing stakeholders with more insight into how the board and management conduct its business, in particular around risk oversight, is an integral component of building trust with stakeholders. And we both know how important that is. The challenge today is that if you're not willing to tell your company story, others are quick to make assumptions and or tell it for you. And that's not a place that companies want to be. Now, what's interesting about the areas that you mentioned, ESG, climate, proxy disclosures, and I might even add cybersecurity to that list, is that there have been fairly significant trends to more disclosure without any formal rules or regulations. So much of the change that we've seen has really been driven by the important voice of stakeholders. And I just think it's relevant to the conversation. Now, we know the SEC proposals related to climate and cyber include provisions for greater disclosure in a company's SEC filings. Many of these disclosures are focused on risk to a company in the short, medium, and long terms, but they also include disclosures regarding management's enterprise risk process and the board's oversight of the most critical risks, and finally, the financial statement impacts of such activities. Now, while, as I mentioned, we've seen some more transparency in these areas over the last couple of years, we know companies still have a long way to go. In fact, the SEC has been sending comment letters to companies this year regarding their proxy disclosures around risk oversight. They haven't been requiring revisions to the documents just yet, but they're certainly setting their expectations for what they expect to see in future filings.
So, you know, I guess we'll just have to wait. Again, some of these are coming down the pike, and we'll see how much is involved. But we have a minute left here. Is there anything else that's in the guide that would be relevant to tell our audience?
TK, I might just mention three quick things. So as I described early on, there are a couple of new FASB standards and exposure drafts that I think audit committees might want to pay attention to. And we described three of them in our paper related to supplier finance agreements, some new segment disclosures that are coming down the pipe, and also income tax disclosures. I also kind of alluded to three topics that we think audit committees are going to want to put on their radar if they haven't already, because they qualify certainly for risks around the corner. And these include considerations around a company's use of renewable energy credits and carbon offsets, its investment in crypto assets, and thinking about the metaverse and the kind of investments to make there. Finally, with each of the topics that we describe, we've included questions for audit committees to consider asking management as they navigate their oversight responsibilities in these areas. So I think there's some real good nuggets and tools for them to take from this paper if they can find it, and when they find it, and work their way through it.
Well, that's a great segue into asking you, we have only scratched the surface. Where can people get sort of a full copy of the guide?
So TK, they can find it in the Audit Committee Resources section at our PwC Governance Insight Center website. And you can get there at www.pwc.com/Governance Insight Center. I think you've got that website also in your materials, but that's certainly the way to get there.
Well, Stephen, thank you for joining us. And I always look forward to our annual discussion about the year-end reporting. So I appreciate you taking the time.
TK, thanks for the invitation.
And that will conclude this edition of Diligence Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.